Yeah, this is the second example we'll be taking, and this is specially centralized on reconciliation of the receivable control account and payable control account. Let's look at this question together now. Now, I read the question. There are different methods through which a business might make payment to suppliers and receive payment from customers. A. State six different methods by which a business can make payments to suppliers or receive payment from customers. 6 marks and 6 marks. B. Explain the following terms: receivable control account, 2. Payable control accounts. Let's attempt those ones before we come to C, which will require us to draw up a receivable control account, reconcile it, a payable control account, and also reconcile it. This is the solution to question A. Methods by which business can make payments to suppliers or receive payment from customers are cash, check, bank transfers, mobile payment, POX, that is electronic transfer, fund transfer, then standing order from the bank, direct debit, bank overdraft, direct debit card, and lastly credit card. Okay, so those are the list of payment. B. Explain the control account, receivable control account, and payable control account. So B1, have a receivable control account. This receivable control account is used to record the value of transactions in total with credit what? Customers. Now the balance on the receivable control account, a debit balance as it is expected to be, is the amount owed the business by all customers. Now receivable control account is double entry system that is used to prove that transactions have been recorded correctly in accounts. At the end of the accounting period, the total balance on the receivable control account is compared with all the receivables ledger balances. Then the balance in the two sets of accounts must be equal, but if they differ, the reasons for the differences must be investigated and corrections made. This process is what we refer to as receivable control account reconciliation, and it is right there in these questions. We're going to just say it, we're going to say it, and we're going to practicalize it. Now the payable control account, on the other hand, the payable control account is used to record the value of transactions in total for credit purchases. The balance on payables control account, a credit balance, is the amount owed by a business to suppliers at the end of the period. The payable control account balances are compared with the balances in the payable ledgers. So the balance in the payable control account might differ from the total of the account in the payable ledger. In this case too, the business must look for the differences between them and effect a correction. So let's go back to the question C, where we are going to put in action reconciliation. Okay, the following information were extracted from the record of OJ Limited for the period ended September 30th, 2016. 1. The balance on the receivable control account was 1,134,400, and the total of the balance extracted from the receivable ledger control ledger account to 1,020,800. Now, as usual, as I said, let's open the ledgers and attack it. We'll call it mass attack approach. Let's take that approach to solve this question C. Question C1 is receivable control account. Okay, then I would also like to have the reconciliation. Let me put the reconciliation on a new page, so that in case reconciliation of receivable control accounts and reconciliation of receivable control account and receivable ledger balances and receivable ledger balances. Okay, so then the next page I'll have to see to, I will have to prepare the payable control account I'll have to prepare it too, and below let me put the reconciliation of payables control accounts and payable ledger balances. Okay, let's go to the question now. I1 give us the balances for receivable and balances for payable. So let's post it. Receivables, we are given balance brought forward 113 400, and that of payable balance brought forward, we are giving it to be were we giving. Look at that question again. Control account was given to be this, and total of the balances extracted from receivable ledger. Okay, receivable ledger. These are ledgers. There is income. It's not balanced, so we're going to look at the difference. So let's look at number 2. Okay, let me put down this balance to 1020800. I can put it down under the reconciliation for this. Okay, this will not be receivable ledger balance. Debit is 1020800. Okay, that is taken care of. Let's look at additional information 2. The balance on payable control account was this payable control account, and the total of the balance extracted from the payables ledger account is this. It's not balancing, so we need to also post that. Where is that? Our payable balance brought forward for payable control account is 570, 500. Then the payable ledger balances, a credit balance is 455,380. Okay, so let's see, back to the question again. Number 3, a cash account totaled 65,760 was posted to the payables control account as 56,760. There is an error, a transposition error. And what did I tell you about the transposition error? Let me take you back to that note, final note I gave you on transposition error. Below, I said there are 4 errors. We have the casting error, and I told you that for the casting error, it is what? It is treated, it is reflected, it is or rectified through the control account. But we have error of what do you call it? Error of complete omission that have to go through the reconciliation. It is ratified through the adjusted control account, and you have to pass through the reconciliation. Then let's see how we are going to treat this error now. Okay, it's part, well, remember we said we're going to solve it through the control account. The balance on the payable control account was 57,500, and the total of the balances extracted from the payable was, okay, note 3. I said cash account totally 65,760 was posted to the payable control account as 56,760. We're going to resolve it in the payable control account. We'll resolve it in the payable control account, and this is how we're going to resolve it. Cash error, we have it 65,760 minus 56,760. 56,760. Okay, that is 9,000. That is 9,000. So that error has been taken care of. So let's see. 3 has been taken care of. 4, no entry, complete omission now. No entry has been made in the receivable control account in respect of the transfer of debits of 112,000 from a customer's account in the receivable ledger to his account in the payable ledger. To his account in the payable ledger. That is a form of contra. So let's see, it is passing through the control account. So we have it as contra transfer from payable account, and that is 112,000. So it goes into the payable as well as a form of cash air, as a form of transfer to So receivable, it hit receivable, but that is a treatment, right? I'm sorry, that's 112,000. Okay, let's go to another point on the question. So this has been treated. Point 4. An item of goods worth 115 was sold to a customer, had been entered once in the sales day book, but posted to his account twice. Posted to his account twice. So it was posted to his account twice. So we are going to remove 1. And that will affect reconciliation. To affect reconciliation. So this is sales to customer. Wrongly posted twice. 115 should be removed. Okay, that is taken care of. A supplier ledger account has not been adjusted for 11,000 for cash discount to OJ Limited. 11,000 customers ledger, so it hits the customer ledger alone. It hits the customer ledger alone, so it must pass through the reconciliation. To pass through the reconciliation, that is cash discount granted to OGA Limited, that is 11,000. Okay, so that is also treated. That is also treated. A credit balance of 62,320 had been omitted from the list of balances in the payable ledger. In the list of balances of the payable ledger, so we are going to what? Include it. Payable ledger. We have omitted credit balance 62,320. Okay, 62,320 taken care of. Remaining item 8. Sales returned by customer totaling 730,400 have not been recorded in the receivable control account. So we have to put it in the receivable control account. So we have it as sales returns. Sales returns. And that is 73,400. Okay. Let's see the other items. These have been treated. This credit sales of 430,200 to a customer has not been recorded in the customer's account in the receivable ledger, but it is included in the control account. It is included in the controls account. That is 432. So another omission on the sales ledger. So credit sales omission or omitted, please. Credit sales omitted 43,200. So it will jack up the balance. The last entry 10. Purchases daybook was overcast by 54,800. Purchases daybook was overcast by 54,800. Purchases daybook, so we have to reduce it. It has to be reduced, so it hits the control account, payable control account. What do we have there? Purchases daybook, the overcast 54,800. Beloved, that is all. That is all. So let's close our various accounts and see if it will balance. Okay, the total here is 1,134,400. So we'll put it here too. 1,134,400. Pick up your calculator. 113,400 minus 112 minus 73,400. We have a balance carry forward, balance brought forward. The balance is 949,000. So 949,000. Okay, reconciliation. Let's see the reconciliation. 1020 800 minus 115,000 plus 43 200. It gave us the same thing, 949,000. So you can see it has been reconciled, and this is now balance as per receivable control accounts. So let's also look at the payables. Let's balance the payables. The total here is 570,500. So 570,500. Let's have our balance here. Balance carry forward. 570,500 570,500 minus 9,000 minus 54,800. We have it as 506,700. Balance is 506,700. These are balance brought forward. Let's close this and see if it will give us the same. 455,380 455,380 minus 11,000 plus 62,320. It gave us the same thing, 506,700, and this will be termed balance per payable ledger control accounts. Beloved, that is the solution.